Welcome to the Zacks Roundtable Review, a discussion of current events affecting investors as well as other topics of financial interest, featuring the analysts and editors of Zacks.com.
Welcome back to another roundtable. Well, Greece, unbelievable, right? They're saying that they're not going to give in to a slightly smaller haircut than 70% on their debt. I mean, who do they think they are? Holding up the whole show. But our equity markets don't care. And this is all more about Europe stabilizing and risk assets bid here. You've got gold higher, the euro higher, and U.S. equities continue to find bids with pretty strong earnings. Bringing in our panel here to talk about a Fed meeting, GDP, and the big earnings picture. I want to first introduce our new senior stock strategist, Jared Levy. Jared,
how's it going?
Glad to have you aboard.
Thanks, bud.
What are you looking at for earnings season here?
Well, it's been interesting, right? If you sort of break everything down, before the morning, we had about 52 companies in the S&P report. And all in all, sort of a mixed bag, right? I've got the numbers here, I actually pulled them. You've got negative 9.5% growth year over year on average, right? But the bar was set low, so that's why the equity markets continue to rally. You know, out of that, it's kind of half and half, positive to negative results. What we're seeing, though, is sort of a gravitation to very specific companies. It's no longer like, oh, tech is hot, or railroads are hot. It's not that way. You really need to sort of get more granular and look specifically. Companies like IBM, for instance, fantastic, good long-term plan. They're executing on all cylinders. Google, on the other hand, great tech company, very strong, but it wasn't able to, sort of meet the expectations, which is funny because you think Google, awesome company. Coming up, you've got Apple later on this week. I think Wednesday night they report. Apple, again, firing on all cylinders. And speaking of firing, both CEOs of RIM are out. I don't know if you heard that this morning. So Apple is really sort of taking over that space. Look for the winners like Apple, I think, to sort of control it. I can't say that earnings season is all over good or all over bad. To me, it's sort of just barely making the bar. I'm just looking at individual companies.
Yeah, you made me think of when you mentioned Google was, they're like the guy taking the three-point shot. They're a leader a lot of times, LeBron James, but, they're not there when you need them. Tracy, what are you seeing in earnings season?
Oh, this is the worst season I've seen in 4 years.
Whoa!
Sorry to be the downer, but it just isn't going well. The 2012 estimates were going down into these numbers, and now they're going down again because we're starting to see the warnings. This week it will be key because we're going to hear from more of the manufacturing, not as much from the tech side. And we've already seen a few warnings from them, not for North America, which is still doing well, actually. It's all about Europe and now the China slowdown. So I'm looking forward to seeing what the rest of the bigger manufacturers are going to say this year. They get at least half of their earnings from overseas. That's going to be kind of the key.
Right, so we already had DuPont and Texas Instruments. They warned a month ago or whatever.
Right.
Now you want to know, what do they see in the next 3 to 6 months out, right?
Yes.
All right, Shiraz, I want to focus on the Fed here for a second because so we've got a 2-day meeting, which results should just be ho-hum. Nothing's going to come out of that except more transparency. What is this new policy? What should we expect?
Well, if you would recall, Bernanke had always been very big on this better communication with the street and more transparency. And one key step that they will start taking in this meeting is that these regional Fed presidents, they will release their Fed funds rate target annually through 2015. At the same time, these guys will release when they expect the eventual first rate hike to be. So we know that the FOMC, which by the way is a subset of this broader group, they have already committed themselves to keeping interest rates low through the middle of 2013. My sense is, and the street is expecting as well, that many of these Fed governors would actually go ahead and say they expect these rates to be low through the middle of maybe even 2014. It'll be interesting as to how the yield curve responds to that. Will the 10-year come down even from 2% to 1.5%? Well, it's going to be interesting to see. But the longer term, the thing is that the interest rates most likely will be lower than they'll be higher.
Yeah. So it's not really an inflation forecast per se, but it sort of implies one. And then do you think it'll help though? Do you think the markets will like more this kind of transparency? Because up till now we just get this, we get the votes and the dissents, right? We get Plosser the hawk and Evans the dove, and all we know is what they voted and what they said in a speech.
There will be a lot less variance in reading the Fed's intentions post this announcement and post this release than it was prior. So more transparency in reality we would know which each individual player where they stand and how they expect the trajectory of Fed funds rate, inflation, the eventual reversal in the cycle when interest rates will start going up. So all of that, which are key variables for the market to figure out, they'll all be in the open, and that should reduce overall volatility in how the market reads the Fed.
All right, let's see what it does to interest rates. That'll be the interesting thing overall.
That's right.
All right, we'll be back in segment 2 with stock picks.